Hi and welcome to this video. My name is Julian Komar from Market Update Premium. We trade growth and momentum stocks. And today I want to talk about a very important question. And I know that a lot of traders have problems with it. When to trade and when not to trade. And I will show you in this video a couple of good strategies and tools that I use to determine when it is time to trade and when it is time to stay in cash. A very famous person, William O'Neill, said that the general stock market counts for 50% of the profit. So when you are right about the direction of the stock market and when you decide when to trade and when not to trade, you definitely have an advantage. And it does not matter so much which stock you buy. 50% of the profits will come from the general market direction. The rest of the profits will come from being right in the theme or in the sector or in the industry, and then the rest is the stock. Even if I made a little bit different experience and I'm more a stock picker, I would definitely say the most important thing is the N in canceling, and that means the market. And I want to show you a couple of tricks how you can determine when it's time and when it's not time to trade. So let's jump in. What you can see here on my screen is the market trend model that I use in my video course and that I teach to the members in the Market Update Premium community. It is not developed by myself. It is developed by Brian Martz, but I tweaked it a little bit for myself and I added some more indicators. And what you can see here very clearly is a green, a yellow and a red background. And that is very helpful. So because it shows me, okay, when the background is green, it's time to be in the market. It's time to look for new trades. When the background is yellow, that means a potential trend change is on the way. But that does not mean that I'm going to sell all my positions. No, I'm just monitor them a little bit more closely and probably will not enter new trades. And when we have a red background, that means it's time to be in cash or it's time to reduce positions, or on the other side, it's really time to stop taking new trades. And in the last couple of weeks, it was very difficult because the market was in a sideways market. And that is the first thing. When you are not a short-term trader, you need to stay away from, and in sideways market, you need to be in cash or you need to adapt to the market, and that means more short-term trading. I always say to my members, there are only two strategies to handle the sideways market. Either you sit it out, so that means you hold on to your stocks, but you must give them all the room, or on the other side, you stay out. And staying out means either being in cash or maybe adapt to the market and trade a little bit more short term. So you can see we got a sell signal here on Friday, the 21st of February, and after that, the market went down. So it was very easy for us to go to cash in the community. I'm also monitoring the net highs and the net lows, and I'm looking for divergences between the Nasdaq composite and the market trend model and the net highs and net lows. Why is that the case? Because the net highs and the net lows, they are representing the broad market. So I can see what are the thousands of stocks doing in the market. Do they make new highs or do they make new lows? And that gives me a very good picture of what is going on in the broad market. The same is true for the stocks above the MA200. So I'm monitoring the percentage of stocks in the US that are trading above the MA200. And at the moment, you can see the value is just 44.9%. That's a very low value. So that means the majority of stocks is below the MA200 and probably they are in a downtrend. That's not an environment where you want to trade. And when you now look at the different market indicators, that means the market trend model, that means the net highs, net lows, and the stocks above the MA200, you can see very clearly that they are now in sync with each other. We had on the sell signal, we had net lows, we had a drop in the stocks above the MA200, and we had the sell signal. So it's time to become much more defensive and also to stay in cash. And that's what I discussed also with my members in the community. So, and over time, this market trend model helps a lot to stay on the right side of the market. I also have another market trend model. I don't want to discuss that here now in this video, but it's more a long-term or mid-term market trend model, which keeps us on the right side. So that means, do we look for long trades or do we look for short trades? But this model here, the short-term model, that helps me a lot to say, okay, is it now a tradable period or not? And Brian Martz found out a second thing, and I also want to share that with you. He did a lot of studies about that. And this is here, this small table here, the rally type. And this is very important because Brian Martz monitored what happened to the indices and what happened to the profits after the market rallied for 15 days. There are several studies out there which are similar to that. For example, one is also from Investor Business Daily about the follow-through days. And they all come to similar conclusions. A tradable market, a very strong market, is usually given when the market is up strongly after 15 to 20 days. And maybe now you say, yeah, but then it's too late to buy into the market. That's not true. That's not true. You will have a lot of early leaders breaking out very early in a market uptrend. But on the other side, more and more stocks will join. And when you now think about the situation, you have a market which is in a clear, strong uptrend. And on the other side, new trades or new leaders are breaking out on the upside. You can take them, you can trade them with size, or you can add to existing positions. But this small table here identifies very quickly what type of market are you in. Are you in a whipsaw market? That is what we had here in the last couple of weeks. So that's a market where you want to get rid of your stocks very quickly because you will not produce any profits. In a small losses or gain markets, it's the same thing, but you can get out of your stocks much easier because you have some profits. In a moneymaker market, you want to really put the metal on the pedal and you really want to make money. So this is what we had here in in 2024, even if I would classify this market period here as a slog market. And then you have life-changing markets, and they are very rare, to be honest. But they are the markets where you can make a lot of money. Think about the biggest bull markets in history. All right, but this is a very simple market trend model. And I added all these small notes here to the charts for my members to also help them. We count the trend lines, we count the rally to green to see if it fits to the statistics or not. I add when I increase my exposure or decrease my exposure. And you can see that here in the last couple of weeks, I increased and decreased my exposure many times. So that means I got stopped out of trades and then I bought some new trades, etc. And I was doing a little bit more short-term trading during this market period. The thing is that you never ever know this, if this sideways market will be resolved on the upside or on the downside. And that's one of the things or one of the reasons why you have to take some trades even in the sideways market. Even though I would say it's the best thing to be in cash. If you are more a mid to long-term trader, it's probably the best thing to stay in cash. But in reality, first of all, you have to find out that this is a sideways market, which is difficult enough. And then on the other side, you will get also some buy signals in a sideways market that you have to avoid. And the most difficult thing in a sideways market is really to sit on your hands. And we got the sell signal here on Friday last week, or on Friday the 21st here, and we're sitting in cash since then because you can see that we got a new sell signal and the market really followed through on the downside, and that is the sign for me to be in cash. Would I trade the market short here? No, that is definitely not my business. First of all, I'm not a very good short trader, and the second one, I only trade really short in bear markets, and we are not in a bear market right now. So this is a market trend model, very helpful. But let's look at the indices, right? That's another clue. I always look at the market from different angles. The market trend model, and then I look at what are the indices doing, and on the other side I look at what are the stocks doing. And when you look at the price action of the indices, you can see that the Nasdaq Composite, which is my lead index, went sideways here now since December 16. So since a while, it's just going sideways. That's another clue to be maybe a little bit more defensive when it comes to new stock positions. And then it broke down here. And what I'm always doing, and I share that with my members too, is I create scenarios. What I will do if we have a market rally, what I will do if the indices are moving higher above the moving average, etc. Because that really helps me also to prepare myself mentally for the situations. And on the other side, it also helps to react to new buy signals. So, but at the moment you can see the price action of the indices is sideways, and that's another clue maybe to stay in cash. And if the market breaks down like this year, you also want to be in cash. I mean, look at that, right? The price is trading below all the moving averages, below the EMA 65, below the EMA 21, and below the E8. That's another reason that we have a clear short-term downtrend. And maybe now you think about, yeah, but what are you doing if the market will bottom here? You will miss a rally. Yes, your emotional brain speaks to you again. So in that case, my market trend model, the indices and my stocks will give me buy signals and I will follow them. You know, this is something which I'm constantly aware of, and I'm constantly also training myself not to listen to my emotional brain. You know, of course, I also feel FOMO maybe as you, but on the other side, I react differently to that. And that's very important. If there's nothing to trade, I will not trade. If there are new buy signals, I will buy. So if the indices turn around, I maybe will look for some new buy signals. If the indices break down, I look for going more to cash. So that is how I'm following my routes in my trading system. So indices give another clue about what is going on in the market and whatnot. And I give you another source. And these are, what are the leading stocks doing? This is very important. William O'Neill said in the past, where the leaders go, so the market. And I think, other traders said that as well. The leaders like Nvidia, like Palantir, these are the stocks attracting all the money in the market. Everybody wants to own them. Everybody wants to have or participates on the profits of Nvidia and Palantir. What do you think will change in the market if these stocks that attracted all the money and are probably the best stocks in the market stop going up? What is that for a sign? Yes, you're right. It's a sign that something changed in the market. And we discovered that early, right? So if you look at Nvidia, for example, you can see it's going sideways, and it is also leading the market a little bit on the downside, to be honest. It was very choppy. It had this rally attempt. We tried to trade that. In hindsight, maybe a mistake. But then it broke down together with the data center stocks, and we had this data center sell-off event. And I said to my members on that day, I said, this data center sell-off event changes a lot in the market, because if these stocks that attracts all the money that are leading the markets, if they are breaking down, something is wrong in the market. The market participants change their view on the best stocks in the market, on these stocks that they invested all the money in and now they are selling them. Something changed in the market. And sometimes it's just a rotation into other stocks, but very often it's a signal that they really want to get rid of stocks and maybe that the institutions increase cash positions or go to more conservative stocks. And you can see that here with Nvidia. Palantir followed a little bit later here after they had this climax top scenario with a lot of other stocks as well. So App is another stock that attracted a lot of money in the market, and it had, we can also quickly look at that, and it also had climax top. With these stocks together, a lot of other AI stocks topped, story stocks, etc. I mean, they gave some very nice buy signals in the last couple of weeks, and we traded some of them. But on the other side, they also got into a climax top scenario. Then, IPO leaders, so stocks that after the IPO had great rallies, they also turned around. You can see that here with A-Lab. You can see that with Credo, which is very choppy or was choppy in the last couple of weeks. You can see that with a nuclear energy theme like GEV. You can see that with a leader like CLS, which became very volatile and is now turning on the downside. And also Reddit is another one which comes up into my mind, which was a stock we were trading and also on the other side observing as a leader to get some clues what is happening in the market and what not. So when you now look at all these three different information sources, the market trend model, which is my main model to say if I want to be long in the market or if I want to be short or cash in the market, then what are the indices doing, and then what are the leading stocks doing, you can see very clearly when it was time to become a little bit more defensive. And that's exactly what we did in the last couple of weeks in the community. You know, every trader in the community trades a little bit different. Nobody has to copy me, or, you know, I personally also don't like that people copy me, because I think every trader is unique and needs a unique trading approach. But on the other side, what we are constantly doing all together is assessing the risk in the market and, you know, making sure that we are trading in the right direction of the market. And, you know, by analyzing all the price action that happens in the market left and right, by leading stocks, by the indices, and also what the market trend model says, we're able to get this information and make the right decisions about that. To stay in cash when there are times with low probabilities to make money on the stock alongside, or on the other side, you know, to be really in cash. All right, so I hope that this video helps you a little bit. If you want to know more about that, you can follow me here on YouTube, but also on Twitter, of course, or you can visit my website and look at the video course, or join my member community 14 days for free.